Hey, welcome to the NZ Everyday Investor. Now, it's common sense, but we're often more free to express our opinion when we have nothing to lose. Expressing controversial views can often have even more of an impact, though, when we do have something to lose. Perhaps it's your job security or even your reputation that's at risk when you stand up for what you truly believe in. Now, shortly, I'll cut on over to a chat that I had last week with Sam Stubbs. Sam is the founder of Simplicity KiwiSaver. It's his third time on the show, but today we're tackling two tricky questions in two rather separate areas. The first one is, why are floating rate mortgages so expensive in New Zealand? Currently, with the main banks, for example, you can get a fixed rate loan in the low 2% area. But floating rates with these same banks are at least in the high 3s or low 4s. Now, in a world where it seems that the risk of interest rates increasing is virtually none, or in fact, it may actually decrease further, a floating rate loan gives borrowers a tremendous amount of flexibility over fixed rates. But unfortunately, to get that benefit, you have to pay a hefty premium for it. Now, Sam heads up Simplicity KiwiSaver. This you may already know. But what's not so well known is that Simplicity also currently provides floating mortgages to some of its members for 2.25%, a floating mortgage. Now, how is this possible is one question. Then the next question becomes, why aren't mainstream banks doing this already? Now, the second thing we're talking about is the New Zealand Stock Exchange. Is the NZX functioning in a way that is beneficial for stakeholders, not just shareholders? In recent years, we've witnessed more than one high-profile company opt to list on the Australian Stock Exchange over the NZX. Why is this? The NZX is evolving for sure, but is it moving in a direction that will help investors, other fund managers, and the bright spark businesses in New Zealand that ultimately want to stay here when they succeed? I think you'll really enjoy this unscripted chat, and regardless of where you stand on the issues, hopefully you can appreciate the challenge that he's bringing to the status quo. Now, please be sure that you've subscribed to the show and that you're following what we're doing here. And don't forget that every Monday you'll find a new audio podcast also. So next time you're on Spotify, make sure that you've subscribed to the show there also. That's enough for me. Let's begin. So we've had you on the show, I think 2 times already. Yeah. Last time we had you on was with Robbie Paul from Ice House, and we were talking about that relationship that you had there. Yeah. And I occasionally will watch what you post on LinkedIn and see some of the commentary that you put out there. Yeah. What I love about you, Sam, is that, number one, you're willing to spend time with people like me, people that are just keen to explore things. You give time to people that other people wouldn't give time to. So, thank you on behalf of everybody who.
Very welcome.
Yeah,
welcome.
And the other thing, though, is that you're not afraid to share your opinion. And I think in our culture in New Zealand, it's often difficult. It feels scary to put your opinion out there, but you're cool with doing that.
Yeah, look, I'm very lucky. I've got a reasonably thick hide. I mean, I come from Sunnyvale in West Auckland, so you've got to have a reasonably thick hide to survive there as a kid. And then I think also, I'm old enough now and financially stable enough that I don't really care. Yeah. What I don't care about upsetting people. Yeah. If I think they deserve to be upset. I mean, I really try to depersonalize it. It's very not often about the individual. The individual is generally very well-meaning people. It's often about the institution or the structure or the environment that you're in that I'm criticising. In fact, I try really hard not to criticise an individual. So, or it's the role. I don't know. My mum said that bad things happen when good people do nothing. And I'm kind of a buyer of that sort of. I mean, there's things I don't like about Jordan Peterson, but the thing I do like about him is I love his idea that you have that you should embrace responsibility. And I think that fund managers and industry leaders need to understand they have a responsibility not only to their shareholders but also to make the system better, improve it, right? And
what are the pain points? Feel the responsibility that drives innovation.
Well, and one of those things is to engage with the fourth estate. I mean, it's an absolutely critical part of a modern functioning democracy, right? And in its many forms. Yeah, and so it just feels right to do that, and I've lucky enough to be able to do it. Yeah.
That's awesome. Well done.
Thank you.
So we're going to have a kind of like a 2-part discussion today. Yeah, cool. I want to pick your brains on 2 things that I've seen out there, I've observed over time, specifically in the area of lending, so mortgage lending, and then secondly, I want to talk briefly about the NZX.
Okay. Cool.
So let's talk, and we can talk about anything really. We can talk about trains. We can talk about the underground, train thing that's going on right now. But let's talk about the floating rate mortgages.
Yeah.
Firstly, why are they so darn expensive?
Yeah. Well, it's a bit of a mystery actually. Look, I think a bunch of that is history. So they always just have been, so people expect them to be. Part of it is the capital requirement. The Reserve Bank will want a little bit more capital because of the untermed up nature of the loan, because of the flexibility of it that the borrower has. That means there can be a run on bank assets, and therefore the bank needs to provide a bigger buffer. That's a little bit of the answer, but you can't make the maths work to justify anything like the difference.
Right.
And I think the other thing is that banks generally like to create the illusion of offering these things, but they really want you to term up loans, right?
They want you to fix.
Yeah, they want you to fix, because repaying a loan after going through all that palaver is just not profitable for the bank, right? So when we looked at it, I'm sure we lend, and we lend at like 2.15% floating rate, right, which is below.
Yeah. Actually, let's unpack that a little bit more, actually, because that's quite significant. So many people will know Simplicity as a KiwiSaver provider.
Yeah.
But you entered into the lending space, almost 2 years ago?
1 year ago now.
1 year ago now.
Yeah.
And what was so different about what you're doing is effectively you're kind of cutting to the chase, and you're offering the most competitive floating rate mortgage product out there to the market.
Yeah. And look, we're not doing anything new. Simplicity never does anything new. This is just what building societies and thrift societies have done for centuries. We're just doing it online, right? So we're saying to our members, look, we can invest your money in the bank and we'll get you right now about 0.5%, or 0.5 to 1%. Or we could lend it to other members in the form of a mortgage and get you 2%, right? Or 2.15 in this case. And from our members who are borrowing point of view, they can say, look, you go to the bank and pay 3 or 4 or sometimes almost 5% floating rate, yeah? Or you can come to us and pay 2.15. So the borrower pays less, the investor gets more. Who misses out there is the bank. We just disintermediate, right, banks from the process. And there's some limitations there because there's only so much you can lend, right? Because we're not deposit takers.
Right, you're funding it basically from
we're funding
from
KiwiSaver investment funds. Yeah. So it's smaller scale, but it grows as we do. But that is a very efficient way of lending, and the fact that it's floating rate is actually kind of real cool, because if you think about a borrower, giving them the maximum amount of flexibility to pay this thing off earlier just makes them wealthier, right? It's good for our members to be able to pay this thing off. From our point of view too, not terming it up means we just open up the mortgage and you just almost treat it almost like it's not like a check account, but we don't have to refix it every year and go through the administrative hassle of resetting, refixing. It is a hassle. It's a hassle. It's a pain in the neck, right? Yeah. So just having an open floating 30-year mortgage, pay it off as fast as you can, is kind of good for everybody. Yeah.
A lot of people will fix their mortgage because, number one, it gives them certainty over a period of time that the interest rates won't change.
Right.
But number two, and I think this is actually the majority of the reason why, is that it's just cheaper relative to a floating mortgage rate.
Right.
That's probably actually the number one reason. Because I've been doing this for quite a while, and I noticed that many people, when fixed interest rates were higher than floating interest rates, and that has happened in the past, people would float.
Yeah,
because most people, even though they think otherwise, do different things. They actually go for the cheapest rate.
So if you think about the crazy anomaly, and it's very interesting you say that, and you clearly know what you're talking about in this area because you do it a lot. So from our point of view, I just looked at it very simply. I said, look, in theory, a floating rate should be cheaper, because if you think about the process of refixing all the time, the administrative burden over the life of the loan, that is way more significant than the capital requirement needed for a floating loan, and it's just open and you can pay it off as you want to. So there's no compelling reason why they should be more expensive. I just think it's because the banks can, because it always has been that way.
Well, in other words, it actually should be the reverse, because you should be paying a premium for term certainty.
Absolutely.
So if you're floating, it should actually be cheaper, logically, right?
I think so, yeah. I mean, I have yet, let me put it this way, of the bankers I've talked to, no one can give me a really solid reason as to why it's more expensive. They refer to the additional capital costs, but that's a rounding error. It's not a lot of money. And I just think it's because they kind of don't like the idea that people can repay these things quickly. Right. Like they have surety of cash flow, right?
Yes.
And think about bank executives. I mean, they're very nice people, but the role is to maximise short-term profitability, right? You do that by terming up a really big book of loans.
Right.
You don't do that by providing customers with flexibility at a cheaper price to repay it when they can.
So there's a conflict. There's a conflict.
Yeah, well, sort of. And also, you can arbitrage. If everyone had floating rate loans out there really cheap and you could just flick them, people would be shopping. It'd be a more efficient marketplace.
Totally.
Right.
The biggest reason why people don't change lenders, even though they might have a really negative experience with that lender, is because their fixed rate still has 6 months to go and they have to pay a break fee to change lenders.
Exactly.
So it creates this inertia where you're locking up your customer, you're tying them down.
Yeah.
And I guess ultimately going forward, you're not going to be able to get away with not serving your customers, because technology, if nothing else, will cause us to have to serve customers better.
Yeah, I mean, don't get me going on break fees, but the
I kind of want to get you going on break fees now, Sam. You just provoked me.
Is there any rationality in your mind to it? I mean,
No. And it creates this feedback loop where people often get fixated on getting on the cheapest fixed rate possible, and they're willing to pay $10,000, $20,000, $30,000 a year to get on that cheaper rate.
Yeah.
What I see is just insane. Fixed rates complicate the heck out of everything.
Yeah. So we consciously chose not to do that.
Yeah.
I'll tell you the other good thing about a floating rate from our members' point of view is that not only are you repaying it faster, but that means we can recycle that capital more, right?
Sure.
The faster you pay off your home, the more we can lend to other people. So there's a goodness on both sides there.
Yeah.
So I don't think we may end up terming up things, but only if we can completely automate it and only if it's really good for the members to do that. But I don't see any reason why it is. I really don't.
No, and I guess especially if you look at the current environment, it seems like a lower interest rate environment will persist for even longer than what many think. That's my suspicion. So if that is true, then what is the risk that you're trying to protect yourself against? And is it really worth paying a premium and being bound to protect yourself against a risk that doesn't exist?
Yeah, totally. And look, you're really swimming against the tide. If you think that interest rates are going to go up and stay up, you're really fighting a very, very powerful trend, which is the disinflationary impact of technology, right? That's been going on for a long time, right? In 1996, the New Zealand government was borrowing at 8%. Now it's 1%. And that's just been a pretty constant trend all the way down. And that has been because of technology, right? In fact, it goes right back to 1300. If you look at the interest rates trends, there's some volatile periods there for sure, but it's a very powerful trend. And that kind of makes sense, right? I mean, I don't know what they'll do short term.
Yeah. And tell me, just practically, so presumably the people who are eligible to take out a floating mortgage with Simplicity have to be KiwiSaver members already? Yeah,
so we ask them to be a member for a year. We just don't want people transferring into it just to get a mortgage, right?
Sure.
Straight away, we'd like them to have almost proven themselves as members, and we get a savings history and all that sort of thing. It's a nice due diligence thing because we want to only lend to the safest lender, which is why I have this 80% LVR there as well. And also we have a limited amount to lend. Right, so if we open it up to everyone, we'd be swamped with demand, and we don't have that amount of money, not yet. And I think, it's interesting. I was just thinking back about this. Why is everything always termed up? It goes right back to the source of funds. You know, if you're an international lender, you want to lend to a bank here in New Zealand, wholesale funds. You don't want to lend them on call. Basically, you want it. It's worth the effort to term it up, right? So you can bank the cash flow, right?
Correct.
Which makes you look good. That then gets passed down to the fact that the bank has a book of funding which is termed up, right? Which means you then want to lend and match that.
Correct.
So I understand the motivation, but it just doesn't make it right. It's not. It's just convenient for the industry so that they can book revenue and profits and match their risk and liability.
Yeah.
But I'll give you an idea of the insanity of this, right? I mean, I think the banks have a massive internal conflict of interest here, and this is going to come and it's going to bite them eventually. Because here's what's happening: you look at KiwiSaver. There's $76 billion worth of money saved in KiwiSaver. Of that, I'm guessing about 20 to 30 billion, let's be conservative, 10 to 20 billion of that will be domestic fixed interest, right? Okay. The KiwiSaver managers are putting out in the market at 1 and 1.5%. But if I'm running a bank KiwiSaver scheme and I'm the KiwiSaver manager, I would want to be doing what Simplicity is doing to maximise revenue to my members, KiwiSaver members. I want to make them more money.
Great.
But what bank scheme is lending to its KiwiSaver members at below market? None, right? So the conflict of interest there is, are you actually exercising your fiduciary duty to optimise or maximise your KiwiSaver members' returns by sticking in bank deposits when you have in your organisation, the bank, a mortgage writing machine, customers who want mortgages? Shouldn't you be cannibalising your own business in order to benefit your KiwiSaver members? So there's the conflict of interest, right? Now, I'm not sure what reasons they would give, but it's not hard, and arguably they should be doing it. It would be very, very disruptive for the banks to do that, but I think there's a conflict of interest. I think if you're a KiwiSaver manager for a bank, you need to be having a fight internally about lending to your own members. And by the way, thrift and building societies and banks have done this for centuries. It's nothing new here, just higher tech. So the mortgage market there's going to be some interesting tensions coming in there.
That's right.
Yeah.
And like what we've seen recently with the whole GameStop saga in a different layer, you know, if there is an inefficient, somewhat closed off, murky sort of thing that's going on, that will get found out in the new world.
It will.
And there will be some form of arbitrage which will sabotage. And it will. And if you're not doing it internally, right, like what you said, if you're not actually disrupting yourself, i.e., if you're the bank, not disrupting yourself, that time frame between where you're displaced gets shorter and shorter.
Oh, totally.
Neobanks are right around the corner.
Well, and you look at those mortgage lending spreads now. The last time I looked at them a couple of months ago, they were back to all-time record highs, right? So the banks have taken, as far as I can tell, and I'd have to look at their accounts in more detail. I need someone's a little bit more of an expert than me in accounting, but it seems to me as if the depressed bank profits right now because of large provisions for doubtful and bad debts, will they materialise or will they get written back? Certainly, I don't know. But at the top line, the mortgage, and here's the irony of mortgages, they seem cheap, they're really expensive because the spread the bank is making over its funding cost is huge. And if you look at the floating rate spread, it's like the chart I looked at was back 20 years. I think it was higher once in 20 years.
Yeah, wow.
You know, so and of course the banks, of course, they're commercial entities. They want to play on this perception of low-cost mortgages. Mortgages are not low-cost. Mortgages are very expensive.
Back in the day when interest rates were 6.5%, that's a bigger number, right? So maybe their margins were skinnier back then, but now when you're looking at, say, 3%, if their cost of funding is, a third of that,
the
numbers are different.
You know, and this is how banking operates, right? We've got I'll show you how a bank operates. It's really simple. If you want to understand banking, it's just the person. There's three things here. Person pays 3%, right? 1% of that money goes to the depositor who's put the money in. The other 2 go to the bank.
Yeah.
That's a money-making machine. It's actually as simple as that. There's nothing more complex. But what I would say, the model is ridiculously profitable. But here's the problem with that model. That model relies on ignorance because it relies on the borrower not knowing who the depositor is. So the bank's the marketplace for this, right? They get to charge 2%. Because if you're borrowing money, you can't go and borrow it yourself, right? You've got to go to a place where the money is. Right. And the depositors come here because it's, quote, safe, right? The banks have this license to operate a money machine, but here's the problem with it is, and this is where technology, I think, is really threatening for banking. It's not FPOS machines and contactless payments. It's that the thing with technology is it creates transparency, and it lets people see what the truth is. And so when people understand that, you know what, you're basically preying on my ignorance. As soon as I have access to a marketplace where I can find lenders and the lenders can find borrowers, and you must get like a peer-to-peer relationship there. That, to my mind, is the real threat of banking. And you sort of see it with Harmoney, where you get fractionalized. There are steps going here, and they're all technology enabled. And it's the other problem I have with the stock exchange, which we'll talk about later on. They're fundamentally running a very poor marketplace.
Yeah.
So, or an outdated marketplace.
Yeah.
So and look, if little old Simplicity can get in there and suddenly have the cheapest floating rate mortgage in the market, and I'm not talking a little bit cheaper, I'm talking half the price.
Yeah, that's right.
It's crazy, and that's
right.
good for our members.
Yeah.
Now because that's based on truth, transparency, and technology. All of those three things are threats to banks.
Yeah.
And they're all coming at once. It's just quite how they manifest themselves. I'm not quite sure yet.
Yeah, interesting.
And all they're doing is making an old style model, thrift building society. They're just modernising it. And because those thrift and building societies were fundamentally organisations based on truth and transparency, members looking after members, no one making any money in the middle, right?
Yeah.
So, and then you put technology in, and then suddenly you've got quite a cocktail, a threatening cocktail.
Correct.
Yeah,
it's going to be interesting to watch.
Really interesting,
because there's going to be catalysts, and
Yeah.
arguably Simplicity is acting as a catalyst for change.
Yeah.
But I think underneath this, maybe there's two stages. There's neobanks, and we haven't really seen them hit New Zealand shores yet that I'm aware of.
Yeah.
But then you've got decentralized finance, which will be further down the track.
Yeah.
That will be the real deal, in my opinion.
Yeah, I would agree with you, and I'd overlay that with a sort of a social purpose and enterprise. So the smartest kids out there now, they want to make a salary in a fair so, but they want to make a difference, right? So social enterprise and banking is kind of interesting. That's what thrift and building societies were. It's what we are. And, look at Simplicity. It's just insane. In 4 years, we've got 57,000 people to give us their retirement savings to look after, right? Billions of dollars, giving away to charity, and yet the whole business costs less than $1 million to establish. Now, very low barriers to entry now, and we have the smartest people who are so motivated to make a difference, and I think that's going to be a competitive differentiator now. So the world of finance, the world of social enterprise hasn't yet inculcated the world of finance. It's one of the last redoubts, right?
Mm-hmm.
But I don't know, look at an organisation like Vanguard, $7 trillion under management, never made $1. So it's possible to actually do this in real scale.
Yeah.
Or Southern Cross, look what they've done in medical insurance, right, over 75 years. So I think that what you were saying is absolutely right, and then you throw in the social enterprise element of it, which attracts the smartest, finest minds. And, it's going to be super interesting, eh?
Yeah. It is a good place to watch.
Yeah.
And, okay, so let's now change tack a little bit. I want to talk about the NZX, because it's something that I've never really gone into. What is the NZX? So let's just start there. What is it?
Yeah, sure. So it's called the New Zealand Stock Exchange.
Thank you.
And it's actually really it's a legal entity, right? So it is the exchange for New Zealand. It doesn't have a monopoly, but it has a sort of a quasi-monopoly because it's been around for so long. It's been the one stock exchange. And effectively, the way I think about the stock exchange is, forget about the fancy titles and that, just think of it as a marketplace. Think of it as a farmer's market on a Saturday morning where stallholders come and put up their wares, and those are the companies who are selling their capital. And then you get buyers who come in here, investors, and they hunt around and they say, I'll have a bit of this, bit of this, bit of that. And like all farmers markets, though, it's competitive. There's another one down the road. So the New Zealand Stock Exchange for the longest time was effectively a monopoly farmers market. So it didn't have to spend too much time worrying about how well it did its job. And
it's like a countdown.
Yeah, it's countdown with no foodstuffs, no pack and save, no nothing. It's the only supermarket in town, right? It doesn't care. So what it did then was it said, well, there's only so much we can do running this model, so we'll set ourselves up as a fund manager as well, and that's much more profitable. So the heart and soul of this exchange, the energy of them has always been gone into being a fund manager. They've listed more funds on their platform of their own funds than they have other people's companies. I would say certainly in the last 5 years and perhaps in the last decade. But anyway,
right. So that's kind of like the equivalent of, say, Countdown bringing their own white label of every product on the shelf.
Actually, that's a great way of thinking about it. That's exactly.
You can keep that, Sam. That's for you.
That's a great way of thinking. Actually, do you mind if I steal? I like stealing good ideas. So that's a very, very good example, right? So you just like a white label would piss off the existing manufacturing suppliers. But if you're the only supermarket in town, you've just got to suck that up, right? Because if you want to sell your goods, you've got to sell it there. Here's the problem for the exchange in New Zealand. There are countdowns all over the world. In fact, there are pack and saves and foods all over the world, right? There's the Singapore Stock Exchange, Australian Stock Exchange, all of them, every country has one. And they're all competing for listings. They're all competing for companies to say, set up your stall here. What the New Zealand Stock Exchange has done is, in the pursuit of profit, because it's a for-profit enterprise, and it has made its shareholders a lot of money over the years, and its key staff. I think that the salary levels at the Stock Exchange are crazy, how much they pay their people. But anyway, they have, in the pursuit of profit, what they've done is, in this marketplace, they've said, yeah, we'll set up our own white label, as you say. So they've set up their own stall, which is their own fund management operation. Now, I am biased. I'm a fund manager. It really annoys me that the place where we go and buy and sell shares, the market I've got to go to buy and sell New Zealand companies, also has one of my competitors there with a nice fancy stall, and actually they're not so much interested in the farmers market, making it the nicest place to be. They just want to get the people who are coming in here to buy from their stall. Right? So it's like putting those white label products front and centre on the best aisles, right? So the problem with the exchange has been, I call it an energy thing. The energy of the New Zealand Stock Exchange has been into maximising its own profit, which is understandable. It's a for-profit organisation, by competing with its stall holders, by setting up its own stall. And in the process of doing that, it has not devoted the energy that it needs to, which is to get people to come to the market, as many people as possible, and get as many stall holders, and defend its position as the place you want to go to instead of going to the other market down the road, right? Australian Stock Exchange. Now, it has patently failed at that. And you know that because if you have a look at the percentage of GDP that is in the form of listed companies, New Zealand does terribly. And the ASX has been basically stealing. I mean, the most obvious example was Xero, that left New Zealand and went there. And a whole lot of New Zealand companies now are actually completely bypassing the New Zealand Stock Exchange and going to Australian Stock Exchange. Yeah. Now, listen, if it was working well, it would still be somewhat swimming against the tide, because a lot of companies out there don't want to be listed on the stock exchange. It's transparency, and you've got to deal with shareholders and annual general meetings, and there's a whole lot of private equity that comes in and says, you don't have to get with that hassle, just sell to us, right?
So it's a systemic issue.
There's a systemic issue for stock exchanges globally. Yeah. So there's no doubt, I'm not pretending for a second that they're not swimming against the tide. They are, even if they were doing well. But they've compounded their problem by putting the energy into the fund management business. Now, what they've done recently is they've separated off the regulatory functions of the exchange from the, let's call it the fund management functions of the exchange, different boards and so on. But it's still the same people who own both. And I haven't seen any evidence of the energy moving back to the regulatory part. So to my mind, it's a somewhat illusionary, but it gives the illusion that they acknowledge the conflict of interest in doing something about it.
Right.
I think that the stock exchange is probably a dead man walking now.
Right.
I think that, and I don't think that it can't be bought, because technically, you won't get overseas investor approval to buy it. I guess you could take it out internally, but I don't think any domestic investor is going to want to own the exchange, because all of their competitors will just leave.
Right.
So it can't be sold, but it can die a slow death.
Right.
Just because, and all the stall holders just pack up and leave, and then it's like a deserted supermarket.
Correct.
And I think it's on the way to doing that.
Right.
It's becoming less and less relevant. Every now and again you'll have a high profile listing like My Food Bag or whatever, every now and again, but they will be bright lights in a dark sky. And
the sunset is happening.
And the sun's been setting on it for a while. Yeah. There was a time, I think, and could they turn it around? Maybe, but they'd have to very demonstrably change the way they operate now. And look, we have two hats on here. We're clearly a competitor of theirs, so don't expect us to say nice things about their fund management operation. But we are also consumers. We also go into that market every day and buy and sell shares. And we are putting less and less of our money in there every day, because it has fewer and fewer companies that are attractive to us, and more of it's going offshore. So it's not good for New Zealand.
And talk to me about that, because that, in my mind, that's what I see as well. In that, cool, we've got some companies here on the NZX. Interesting. Yeah. Nothing really excites me to a huge amount, right? I look at it and go, we've had those companies for a while now. Yeah. What about some of these new companies that we're hearing about everywhere else? what is the right thing to do for our Bright Sparks in New Zealand? Like, how can we give them a pathway to actually eventually list in New Zealand? If we were to redesign something, is it even possible?
Well, I think that, New Zealand's becoming more capital rich, right? KiwiSaver is a huge plus in that regard. It's a rising tide of capital that's coming in. I think you've got to get it really early, so you've got to have venture capital and private equity in these funds. So, and more of that from New Zealand. So, that's one of the reasons why we invest in Icehouse and have given them money there. And we're about to launch an expansion fund, which allows companies to go from, say, the first 3 years right up to pre-listing.
Okay.
And put more money, bigger dollops of money in.
Yeah.
Keeps them a little bit more in New Zealand. I have no problem with a really, really smart entrepreneur flying over to Silicon Valley and getting the big money and the contacts. It's just that we want more of that company owned in New Zealand. Right?
And I suspect the companies themselves want to be owned by Kiwis as well.
Of course they do. Yeah. And so you start out early. That's the next thing. And then the next thing is, and look, I'm not a stock exchange employee, so I don't understand the minutiae of what they do. But all I do is look from the outside and say they're not doing enough of it, and they're not keeping enough companies here, and they're not encouraging them to list. I don't know what they need to do, but I do know that overseas, with other stock markets, including some stock markets which are of a similar size to New Zealand's and similar sized economies, we are failing. We're not doing a good job at all. And so I'm hoping that these reforms affect some change. It seems to be more optics than substance to me, but, it's change. It's something good. I'm not betting our KiwiSaver members' money on a vital New Zealand stock exchange.
Right. Do you think by following these from startup stage and funding them at these different stages, do you think that could be the genesis of something new, where effectively you follow them with their success more internally, right?
Well, here's the irony, right? The stock exchange seems to be slowly diminishing in its significance at a time when we're saving more and more money, when there are more and more startups, when the trend everywhere else is demonstrably. So something doesn't fit.
Correct.
They are not the organisation that the country, or they're not operating in the way that we need them to operate to list companies, keep the money in New Zealand and so on. Now, there are other people to blame for this as well. Institutional fund managers have been very conservative and quite, in my opinion, quite lazy with how they've invested the money. And not just passive, just not embracing of risk at any level, just because they don't have to, because ultimately they've been reliant on their distribution franchises rather than the money they've been making. There hasn't been enough, and investors to a certain extent haven't punished bad performing managers out there. I'll be interested to see where we are in 5 or 10 years' time, but what I do know is the opportunity is huge and growing. Well, it's big. It's going to be huge, but it's growing. It's a very demonstrable trend in the right direction.
As they become less and less, some organization will become more and more. Who is that, right?
Probably the private equity and venture capital businesses, and also, it's interesting, other stock exchanges will just steal. Look, it's as easy for us to buy on the Australian Stock Exchange as it is on the New Zealand Stock Exchange. We don't care where a company's listed. It doesn't matter. So we would like them to be listed in New Zealand, but you have to create a competitive advantage to do that. I think one of the real problems with the stock exchange was, be careful what you wish for, but when the national government privatised the power companies, that gave a huge shot in the arm to the stock exchange. If you look at the biggest companies, many of them are the gentailers there right now, at the electricity companies. But what that did was, I think, create a false sense of vitality. Actually, that was a government gift. Right. So it was
a sugar rush.
If you took, it's great. You should
again another one.
Great. So there's a sugar rush. That's awesome, actually. If you took them away now, then the power companies, the stock exchange would be a pretty pathetic exchange to list in, right? I so want them to do well, but I so don't see them doing anything which is meaningful. I'll give you an example. And this is a silly example because I don't want to make this sound as if it's my ego here, right? But I've been set up and running Simplicity for 4 years. I haven't seen anyone from the stock exchange once. I've heard third hand that they'd like to meet or whatever, but there's never been an approach. Now, we're an institutional investor. We're the 12th largest fund manager in the country now. What's going on, eh? And I wouldn't say that's just a stock exchange issue. I mean, I don't think that any of the cabinet ministers could name 3 of the top 10 KiwiSaver heads. That doesn't include me. Just choose top 10. You know, I mean, let me use this as an example.
Yeah, you're right. Yeah.
You know, if I said to the Prime Minister, there are 10 billionaires arriving on a plane tomorrow, each of them will be investing over $10 billion in New Zealand in the next 10 years. So there's $100 billion on that plane. Do you think she'd be down there with a red carpet greeting them? Of course there would if it was an overseas investor. Yet that's exactly what the top 10 KiwiSaver managers in New Zealand will do in the next 10 years.
Yeah.
A massive amount of money. But does anyone know who they are? Has there been engagement? This is at any level of government. I mean, there's some nice things in industry bodies, but, you know, this is not, I mean, I would be all over them to encourage more in New Zealand. What do we need to do? What are the instruments and so on? Yeah. It feels to me as if the stock exchange is just one example of an official institution which is not properly engaging with the source of money. And I kind of understand that because it's new. Right? We haven't had KiwiSaver before. Yeah. But goodness, it's been running for 13 years now. Yeah. The trend is obvious. Correct. The amount of money is huge. What's going on? You know? What's going on?
It's just yet another player in the status quo waiting to be knocked off its perch by the next generation, right?
Yeah. Well, and they will, because it's just a marketplace, right? That's all it is. Yeah. And if that's just a marketplace and you can set them up, I mean, it doesn't have to be it just has to be a place where you can go to and trust that there will be exchange.
Like a decentralized trading platform.
Well, you know, I made a joke when I was running the tower. I said, look, if the stock exchange carries on this way, we'll just get the top 6 fund managers and we'll set up our own exchange. Yeah. We'll just completely bypass them. Yeah. We can buy and sell shares and exchange them ourselves. Yeah. And we'll do it on our terms. We won't even need stockbrokers. We'll just trade amongst ourselves. Now, that's way harder than, you know, that's just a veiled threat. Well, not even a threat. It was just almost having a laugh. But actually, it's not that.
Well, someone with your track record. Yeah, like, if we look at what you've done with Simplicity so far, it's not like you. It's not like you think about these things lightly. This is basically part of the ethos of Simplicity as well, isn't it?
Well, as soon as it becomes an inefficient marketplace, we'll seek efficiency somewhere else. Yeah. So, now look, I just think it's in a death spiral myself. It's dead man walking would be my base case for the stock exchange. Yeah. Doesn't mean they're dead yet. You know? Yeah. Zombies can persist for a while, right? Yeah. Or change. Yeah. Change, no, that's cool. So before we finish up, Sam, like there's so many things I'd love to have a chat with you about here. It's been too long since we've caught up. Yeah. Let's talk about sailboat racing. Yeah, right. Yeah, cool. You follow you follow the America's Cup. Yeah, sure. What's your view on who's going to win? Let's start there. Oh, look, you're not going to get you're not going to get me back anyone but Team NZ. You know,
slightly leading question. Well, right?
And here's why though. I think there's some method to my thinking on this. First of all, is Team New Zealand has about half the budget of the big players. And that means, and you think, oh, that's bad. And to a certain extent, money really matters. But that actually requires us to take advantage of what New Zealand's secret weapon has always been in these things, which is ingenuity, number 8 wire technology, right? Totally. And I think that with enough money and that mentality, we'll achieve miracles, right? Because we always have. We've never been the best funded team out there, never ever, not by a mile. And you look at all of the stuff we've invented, all of the ingenuity, right back from the plastic fantastic boats all the way through to cycling on catamarans last time and so on. So I really back the ingenuity of our team. The second thing is there's something about the DNA of Kiwis, born and bred sailors. Now I know we've got, there's different nationalities on the boat and so on, but fundamentally just Kiwis are shit hot sailors, right? That's right. So, and there's a whole team of them there. We're in our home turf, so we absolutely understand the waters and so on, and there's something about that. Everyone has a home team advantage in any sport. We've got a home team advantage there as well. And I think also, Team NZ have got a very good history of actually keeping a little bit of magic at the end and sort of rolling out some special sauce. So we're hearing this now about the deeper mainsail and all this sort of stuff. And they roll it out at the point at which other teams cannot innovate fast enough in order to be able to do that. It seems like we might have done it again this time. That would be very much in the ethos of Team NZ to do that. So I'm going to back it. But listen, it's
awesome.
Prada. I mean, did you see that ad? The Italians are coming on YouTube. Oh, you've got to see it. It's absolutely awesome. And
there's always drama, though. Eh?
Yeah. Well, the one thing Prada will always do is have the best looking boat. I'll tell you that. I mean, the Italians, they've just got this panache, right?
That's right. That's right. But there's something to be said, though, just about the parallel reality between the America's Cup and maybe even where we're at as a nation right now, right? Like Team New Zealand.
It's an interesting question. Yeah,
you can't just assume that Team New Zealand is backed into a corner. We're too far away. We've got dinosaurs that are slowly dying, and we're getting more and more disconnected. No, like when there's a challenge out there that needs to be overcome, ingenuity comes to the fore.
Yeah. And also look at the other two massive advantages we have. I mean, you've seen this through COVID. Look at how well our institutions work, right? New Zealanders trust their institutions, and they trust them because they work. And so when they ask you to do something, we do something, and we kill COVID. And I know we were an island, and there's some advantages and so on. But man, we really got together. Now that really shows New Zealand at its very finest, actually, and it shows that the symbiosis between government and the citizens is actually very strong. I think that's a huge competitive advantage for New Zealand. The other one is we're about to get capital rich, right? All this money coming in, 2.3% of GDP in KiwiSaver alone.
That's right. That's not to be underestimated.
That's huge, right? So we've got this, and remember, the efficient use of that capital requires you to have that connectivity between institutions and your society. It's got to be efficiently allocated, right? Which is why it's so low to have a better stock exchange, so we can efficiently allocate it. And then the other thing too is never forget the impact of technology, right? If you think about the internet, it operates at the speed of light. So in theory, the greatest relative advantage you will have being able to communicate at the speed of light is to the person who's farthest away. The world gets smaller for the person farthest away. That's New Zealand. And look at how that's happened in our lifetime. Look at Weta, for example, just a classic example. Who would have thought that we would be running an animation studio to make the best and biggest budget movies in the world? Why is that possible? Because the speed of light just allows that file transfer every night.
Correct.
So
I like what you said, though, that the people to benefit the most, the people that are further away.
Totally.
Thinking about phones for a second, right? Because I know you've got a history.
I
read something recently about you when you were really young, how you used to kind of assemble phone parts.
I did. Yeah,
that's pretty cool. But back then, one telephone per household.
We had one telephone per household.
And I remember we waited when we first moved to New Zealand in '86. We had 6 months to get the post office to put a phone line in. Where are we at today? Right, like in a short period of time, we've come such a long way.
Oh yeah.
What's around the corner, right?
Yeah, and you don't know, but what I do know is it's interesting when you look at technology, though. The application of technology, which creates the greatest, let's call it social good or the best for its citizens, seems to run in parallel with the institutions in that country. Okay. So for example, the Chinese, it's made them wealthier, and they use it a lot, and it's been fantastic. It's lifted a whole lot of them out of poverty, but a whole bunch of that was just capitalism anyway. But you think about still, where would you rather live?
Yeah.
Right.
Yeah.
And I think it's the institutions in New Zealand. I mean, I think we massively underrate them. In fact, I was kind of thinking of writing a book or an article on the great New Zealand institutions, because, and I think now that we have capital, technology, and let's say a more Asia-centric world, I think New Zealand is about to enter a period of prosperity, and that it's never seen before. I mean, I think, I look at these, go and talk to kids in schools and university, I said, you are so lucky you're born now. You don't know how lucky you are. Because in my time, we had the number 8 wire mentality, but we had no money and we were very, very far away, right? And that's why, relying on agricultural products. Now look at us. We're so much closer to the world. We have so much more money. We're so much more connected. And all of that is wrapped up in democracy. And transparency and truth and lack of corruption, which should allow the efficient application of all of those things which have now arrived on our doorstep. It's a hugely exciting future. And you summarised it. You said we used to always think of ourselves as underdogs. Team New Zealand, I mean, there has always been the All Blacks, but look at Team New Zealand. Team New Zealand is not just great sports people. It is the best technology. It is a whole bunch of money. Right? And there's a whole bunch of connectivity with the world that allows us to excel in this thing that we're naturally good at. But that would not have been possible without all of this other stuff, right? Heaps of money, heaps of technology. So Team New Zealand is probably a pretty good metaphor for where the country's going.
That's awesome.
It's really cool.
They better win now.
Yeah. Yeah. I'm sure they feel that, yeah.
Awesome. Well, again, thank you very much for being so generous with your time today, Sam.
It was awesome to chat.
Man. All right.
Cheers.
Take it easy.
See you, buddy. Bye-bye.